because there's a little bit of each going on. And so I'll be going over some headlines and stuff. If you're listening to this on podcast, you might want to join the videos on Facebook or YouTube or LinkedIn. Share, like, and subscribe or follow if you'd like. We do this each week. So let's go over kind of some of these market trends. Let's go over the good. And one of the things that we do, we've got hundreds of dealers all over the country, and we track 2-week sales volumes and stuff. And so there's a couple things that I think is happening. I'm going to go ahead and share my screen now. Let me see. Window, share screen, share. Now, as of 2 days ago, on March 4th, we had this peak. Our dealer's average 2-week sale percentage is 50%, meaning if a dealer has 100 cars in inventory, they've sold 50 in the last 2 weeks. So they're on pace. If they're selling 50% in 2 weeks, they're going to be on pace to sell 100% of their inventory in a month. So that's what's going on. That's the good news. And if we roll back to last year's tax season, by March 10th, it was at 55%. If we go back another 2 years to March 8th, March 7th, 56%. And then we go back to 2023 and March 8th, again, it was at 60%. So since the tax season of 2023, 3 years ago, we went from 60% 2 weeks sold to 57 or 56% 2 weeks sold to 55%. We're losing about 1% so far each year. So we'll see where this one peaks at, but it's about that window of time. Okay. So that's the good news. A lot of dealers' volumes up. But just recently, and we went through hundreds of dealers I was looking at in the last 2 days, Wednesday and Thursday, seeing a lot of drop off in lead volume. And I'm like, man, it seems like a lot of dealers are losing traction with their leads. So what's going on? And so again, on average, our dealers are selling, hundreds of dealers selling 100% of your inventory. If you're not doing those type of numbers, reach out to us. We'll show you how to get there. We can help. But here's a couple other things. When it comes to shopper index, again, we're looking 5 years ago. And if we look at where the peak is so far, February 22nd through 28th, we're at a 68 out of 100. So it's really spiked. And so again, this is a 5-year period. So if we go back a year ago in this tax season, it was at 63. And remember, we're at 68. So it's up 5% from last year. And again, going back 2 years, it's up another 4% from 2 years ago. And so 3 years ago, it's at 70. So we're down 4% from 2 years ago. So again, each year, as our dealers' volume has dropped 1%, okay, the shopper index followed. Okay. As the volume each year dropped off. Remember, we talked about 60%, dropped down to 56%, dropped down to 55%. Now, it's right at 50 right now. So we've been dropping off at the same rate as the shopper count dropped off. Okay. It was peaked at 72 3 years ago, then 64 2 years ago, and then 63. So we hit this little peak. So our volume dropped 1%, shopper counts dropped with it, but right now we're at a peak. So I'm wondering, okay, is a dealer's volume going to follow? Now we should have updated sales as of today, but we don't have that in there. We'll see how Monday looks. But here's the other thing. When I start looking at dealer, and you see this right here, shopper counts already starting to drop. So it's like, all right, hold on. Let's go look at, instead of a 5-year window, let's just look at year over year. This time last year, March 2nd through the 8th was at 88. Then it peaked at 93 March 9th, next week, basically. And then it goes down after that. Think about that. Spring break's going to happen. And then maybe anybody who's getting a return might maybe already got it and filed and so forth. So the good news is last year's peak was 93. Right now, this year's peak is at 100. So the volume of shoppers went up last week of February and higher than it was a year ago. So everything seemed like it was going in the right direction, but it's already indicating in the projection for March 1st through the 7th is at 97. It's already heading down. And again, it was heading down in that 5-year chart too. And again, I'm starting to see dealers' leads go down. Okay. And so, the last 2 weeks has been busy, but what's the next 2 weeks going to go? So what's going on? Well, a couple things, and IRS filings. I can go look. And now this is the 20th of last month. So we'll see what they update. Probably next week they'll update it. But filings were down about 2%. And think about all for the whole year of last year, there's only about 25% of the filings have happened as of this report. So we're only at there's over 160 million filings at the end of last year, and we're only at 40,000. So we're only 25% of the filings. So, and it's behind pace by about 2%. But the good news is the returns are at 8.7 or almost 9%. So people are already getting a little bit more money. So that's great. But we forgot what's going on right now, or not that we forget. We had a bombing, Iran, right? And so check out oil prices and crude oil and the U.S. average, okay? So we're looking at gas prices, okay, and crude oil. So blue line is gas prices. That's going to be this right rail here. $3, we've gotten down into less than 270, 280. Now it's back up to 330. Crude oil is shooting back up. So is that causing shoppers to slow down? Okay, so I was just on a call with a Ford store, and they had a bunch of expeditions, or a couple, I should say, that we went through. One of them was, had bench seat in the back, second rows, cloth seat, no roof type of scenario. I'm like, let's get more aggressive. Gas prices are going up. This thing's an expedition gas guzzler. I want to get ahead of this a little bit. Let's just go ahead. If we feel like we're being too aggressive, this isn't a car going to keep me up overnight thinking I cheap sold it. It's just a bench seat expedition. Wasn't moving, weren't getting leads, activity was low. Let's just go ahead and get this thing moving due to this gas price spike. So keep that in mind. Not only that, we get this other headline: jobs are falling, spending is too, and that's a problem. So they're talking about one of the main pillars propping up U.S. economy is consumer spending. It may be starting to crack. Okay, so we're seeing some numbers where Friday the Bureau of Labor reported employers shed 92,000 jobs last month. Okay, unemployment rose to 4.4 from 4.3. So we're getting some layoffs here. We're getting Middle East stuff going on. We're getting gas prices going up, and gas prices is a trickle. And then retail sales declined. Okay. It comes to spending itself is already hitting a rough patch. Retail sales declined, and so things are going down. So are we starting to see the break in the tax season? And so as you can see here, these are the tracking U.S. retail sales. Again, we're going down a little bit. And so if people are getting their taxes and they're getting a better return, are they going to hold out? Are they going to keep the money because they don't know what's going to happen? Strong economies is from confidence, right? And people having confidence of where the market's heading and where it's going. We've had tariffs, getting shut down by the Supreme Court, then coming back in as a different law and different percentages, to then now oil prices going to wherever they may go with this war. If it ends quick, we'll see. So and I wouldn't call it a war as far as attack or whatever you want to call it, but if it ends quick, meaning in the next week or two, that canal opens back up for the oil to move through, then we're going to be able to, it's not a canal, but the major oil or the major transport area they said they shut that down. And if we go in there and help protect those and open that back up, gas prices should stabilize. We'll see what all that happens. But again, gas prices trickle down effect. Either way, consumers, if they're not confident, they're going to hold on to this money. So tax season's not all through yet, but shopper activity is starting to crack already. We've seen it match the trends from before. We see our dealers' volume right now be a little bit lighter than previous years. So all in this being said is the dealers that stay clean with their inventory can withstand this. The dealers that bulked up, hoping for this big old tax season and holding out, keeping their prices high because it's tax season. I'm not going to give away a car. I'm not giving away my cars. I pay stupid money to get them. I can't replace them. Those dealers that are continuing to clutch their purse strap are going to end up being hurt April and May as the normal tax season starts slowing down and spring season hits as people are getting distracted with other things in their life than going out and buying a car. So that being said, keep your inventory clean, man. 60-day aging policy. Look at your last 2 weeks of sale rate and then stock to that level. If you do that, like if you drop down to 45% 2-week sale rate, obviously you don't need to be buying too many cars. And then if it cranks back up to 60% 2-week sale rate, start buying some cars, okay? Just follow that process so you stay lean and clean because you do not want to be holding this bag come April and May. You want to keep this inventory moving and clean. As a matter of fact, traditionally, you want to reduce your inventory levels about 20% going into April and May. Doesn't mean you stop buying, okay? Continue to be a buyer, but just hold on to the right stuff, wholesale, and get rid of the rest. So, and what I mean by that, not buying and going in the lane. I'm talking about private party acquisitions, service drive acquisitions. Always be trying to acquire cars. It's just knowing where you're getting them from and making sure you stay lean and clean. Hope this was helpful. Hope you have a great weekend. I think St. Patrick's Day is coming around the corner. So hopefully good luck with the rest of the month and see where your March ends up. But we'll see. Again, I think a lot of it's going to have to do with what's going on in Iran and then these filings and stuff and see how much extra cash these people have to see if they want to go blow it on a car or not. So good luck with that. And again, any luck on our end, we can help you. We're going to be able to project exactly what's happening on your lot, keep an eye on this market, help you shift faster to keep this inventory moving. Just go to Lotpop.